Let's bring in Derek Holt, Vice President and Head of Capital Markets Economics at Scotia. Derek, thank you so much for joining me. Those were some really pointed words that you wrote in your note yesterday. Just take us through your thinking and analysis when it comes to the foreign buyer ban.
Sure thing. Okay, so listen, this has always at best been a low single-digit percentage point share of home sales in Canada. It's not been the main driver. The main driver of the heat that we've had in the Canadian housing market for many years over a smooth cycle has been the domestic buyer, and the domestic buyer in the context of mismanaged supply. We've done a very poor job as a country in terms of our policymakers across all levels with respect to serially overstimulating the demand side while not doing enough on the supply side. It's convenient and politically expedient to blame foreigners for that. It's factually false.
Yet, from a policy perspective, you can really flip the switch on at least killing demand on the margin, right? Keeping those foreign buyers out and then dealing with, on the demand side, it just takes longer to build homes. It gives you a little bit of breathing room.
Yeah, I mean, theoretically, but at the margin, it's a pimple on the housing market. I mean, it's not going to do anything in that sense, in my opinion, and it's being fought by what they're doing in other population control measures, like very, very strong immigration that I've long supported in terms of the need over time to raise our immigration quotas in order to deal with an aging population and the exit from the workforce of the baby boomers, but not overnight. And we were supposed to plan in advance for these things, on things like housing and transportation and infrastructure, social services, health, education, our schools, our hospitals, and we didn't do any of that. We just flicked the switch, and we are allowing excess number of individuals into the country, while at the same time we're saying, people don't buy our homes if you're not living in Canada. It's policy incongruency at its worst.
And let's bring that to that demand side, to the housing numbers that we've been getting for Toronto, but we also got Vancouver and Calgary. Are you surprised by the sudden surge in sales activity?
Yes and no. I'm surprised it's happening in January and December, because I've often joked that there are only two types of people that tend to move in January in this climate. People who have to move out of necessity, or masochists, because we know how bad the climate can be at times. And January was a pretty cold month. February, not so much so far. But so I'm surprised that it's happening this early, but I'm not surprised about the direction. In fact, I've long told a narrative that has said that the spring housing market in this country would be absolutely ripping. And I think I can point to a long list of probably at least a half a dozen reasons behind that. And so it's just happening a little bit earlier than I would have thought.
Does that mean that the spring selling season could be even hotter, because that's when, in theory, we start to get rate cuts, or at least we're a lot closer to them?
I think for other reasons other than rate cuts, in our view. We don't expect the first Bank of Canada rate cut to come until September, and a lot has to go smashingly right in order to even to get to that point in time. And so we're not really talking rate cuts. I think it's more of a story having to do with the fact that this economy created 430,000 jobs last year, the fact that wages are accelerating at an astronomical pace, even while productivity is tumbling. Immigration is very, very strong. Housing supply is very deficient. First-time home buyers have been amassing bigger down payments to capitalize upon slightly cheaper prices. And so at the margin, I would expect a feeding frenzy in the housing market to be driving prices back upwards again as we go off into the spring market.
Let's go back to that view. You don't see rate cuts until September. Are we on hold until then? Or is there a risk that we could even hike rates?
Yes, there's definitely that risk. I didn't like the way the Bank of Canada managed that risk. I thought the way the Reserve Bank of Australia did last night was better. They kept it in the statement that, listen, we're probably done, but we can't remove the risk of a rate hike. And the Bank of Canada took it out of its statement, but kept it in the governor's opening comments to his press conference. And so it seems like a bit of an inconsistency. I think there's still very much rate hike risk alive in Canada. What we're seeing in terms of some of the purchasing managers indices and the service price inflation and the pass-through comments across many, many sectors of the economy is still pointed in that direction. The housing imbalances are also pointed in that direction. Rent pressures. This isn't just a one-trick pony in terms of driving inflation risk in Canada. We have an undervalued currency that's still stoking some import price pressures. We have excessive immigration, no housing supply, wages that are growing well beyond productivity. People are getting paid more for producing less in this country. And over time, the combined effects are inflationary. Very different than the United States, I might add. Their wage gains are being paid for by productivity. Their immigration is at a lower pace. And so they don't have quite the same imbalances that are inflationary that we do in Canada.
That's a litany of issues as we hear from Tiff Macklem this afternoon. The speech comes out at 12:45 on the effectiveness and limitations of monetary policy. In the past around housing, he hasn't necessarily taken that on other than to say, yeah, those mortgage costs and rent costs went up, and that was necessary function of sort of increasing rates. On the flip side, does he have to take ownership of cutting rates and what that could do to the housing market?
Okay, sure. So I like a comparison to how Governor Poloz played this going back to, say, 2015, 2016, and in the ensuing aftermath. He basically said, look, I can cut rates. I can keep them relatively low. I know that that leads to a deterioration in housing affordability and heats up housing markets, but I've got inflation at a one-handled pace. And I've got trimmed mean CPI, one of the bank's preferred measures, also relatively low back then. You can't say that today. I think Governor Macklem, has to be much more sensitive to the totally different context today. That we're getting this source of another serial source of upward pressure upon inflation through some categories like service prices going forward and housing, in the context of inflation expectations that are unmoored toward the top end or above the Bank of Canada's 1% to 3% policy target range, and in the context of evidence of changed behavior. That's a dangerous signal to a central bank. That's almost a lights out signal that inflation expectations are unmoored. People don't believe in what they're hearing from the Bank of Canada, that they'll control inflation. And therefore, they are demanding aggressive wage gains in collective bargaining and other exercises. And so I think the governor has to take that into context. Instead of dismissing housing, he has to put it in the context of how this is another serial shock that leads people to believe that you'll never get control of inflation going forward. So continue to demand excessive wage gains, and we'll have this ongoing spiraling effect.
And yet, I hear you talking about from the employees' perspective. When we got the Bank of Canada's Business Outlook survey from business owners, it painted a very different picture of inflation expectations.
Yes and no. I mean, it was still toward the upper end of the Bank of Canada's 1% to 3% policy target range. And so I still think we're in an environment of pass-through risk, regardless of what they're saying in those surveys. The PMIs indicated that most of the respondents said that they intend to pass through higher wages with explicit comments on both sides of the border, actually, in Canada and the United States. We saw the same thing in ISM services, the price signals from every single sector of the U.S. economy saying that they plan on raising prices outside of the agriculture, forestry, and fishing and some of those categories in both countries. And so you're getting quite broad price pressures in the services category that's still in that pass-through mode.
Derek, thanks so